Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, look at here, SPY here just continues to melt upwards despite being in overbought territory. You know, volume isn't that high, but you know, it continues to melt up, clearing critical resistant levels. You can see last couple days ago, Friday, we closed above the 200 daily moving average. I mentioned to you guys that 38.2 fib level from all-time high down to October low was at 398.48, and well, we got a close at 398.5, so 2 cents above that. So technically that is a close above that level as well. But I do want to mention that while the price action is still looking bullish, we are starting to enter the bearish seasonality, guys. Right here, second half of January on average is usually bearish. All right, this doesn't mean that the SPY is going to just drop from here. Okay, what it does mean is on average SPY has a tendency of dropping from here. Okay, we have to combine it with the price action. That means we need to see some critical support levels fail. And Uncle, like always, is going to talk about these levels. So let's prepare. So yeah, as far as how I trade it, you know, we had a plan that I wrote here in SPY update. As long as the bull case, as long as above 395 to 395.7 zone, yesterday's breakout was intact, keeping 397, 398.48 in play. And of course, I wrote here, I got first support at 393, first resistance at 395 and 395.7. You know, wait for the first setup before entering. So in my Discord, I always do my best to try to give guidance so that my members can be on the right side of the trade. You guys can see here, SPY opened at 393.6. It did not break 393, but it did break above 395. That's what we look to long. You want to enter as it break out. You know, there is risk to this type of trading or that type of entry. You know, as it enter, because you don't know when it's always going to enter, but you got to be willing to take the risk and have a probability mindset. Okay. If you are afraid to enter when the price is breaking out of the level, what you can do is use the back test and go tactic. That's when we break out a level, a resistant level. We want to see that resistant level get treated as a support. Now, it's not always going to be perfect. In this case, SPY did back test but dropped as low as 395.23 on this 11:45 candle before continuing upwards. Okay, so you gotta have a probability mindset, but you also can't expect everything to be perfect. It's not perfect in this market. It's nothing perfect in this market. But you know, as for me, I just entered as it broke out. I don't know, and I didn't know if it was gonna work out, and it just did. Okay, we got a nice $4 pop out of it. Okay, so that's how I traded Friday. Now, we go on to the daily chart. As I mentioned in the intro, SPY's continuing to clear resistant levels. And I'm telling you guys, as long as SPY is continuing to clear resistant levels, we should remain bullish. All right? This little rally will eventually end. But it will end, like all other rallies, it will end when we get a false breakout setup. That means we clear a resistant level, and then we fail to hold the resistant level or the breakout level as a support, and we break back below. It's happened many times. Okay, so I'm asking you guys, don't try to call a top. If you're swing trading for the medium to longer term, okay, you know, do your due diligence. Try to enter at good levels, of course, right? But if you're like me and you're day trading or maybe swing trading for the shorter term, like I said, watch out for these setups. Wait for the breakdown of support before entering puts or before swinging puts. Because right now, like I said, we're just breaking resistant levels. So let's get to the bull case and let's get to the bear case. Okay, we will start off with the bull case. Please watch the bear case, okay, afterwards, all right? Let's be unbiased about this and be ready for either scenario so the market makers can't rug pull on us. I mean, they can rug pull our fellow retail traders, but not us, because we know how to react. We're reactive traders. So here we go. First things first is that 200 daily moving average, which is at 397-ish, okay? If SPY drops below 397-ish, that is a sign of a false breakout setup, because we got the breakout on Friday. If it cannot hold it, that's a bearish sign if it breaks back below. If SPY opens below 397, then you got to identify where the next support and resistant levels are. So if it opens below 397, that makes 397 first resistant with next support at 395 to 395.7 zone. So if it breaks down that level, 395.7 is the 23.6 fib level from October low to December high. So if it breaks down that level, bearish, bear case scenario continues to stay in play. Okay, so below that would be 393.5-ish to 393 zone. Now you can see these gray little things, these gold little lines here, and then these gray little lines. I got those are areas of liquidity. Okay, I made a video on how we can identify areas of liquidities. I call it the AOL zone, how we can identify the AOL zone by ourselves. But having this indicator just is convenient for me, because I don't have to go out of my way to identify it. It can identify it for me. And I've checked to make sure it's legit, and it really is legit. Okay, so you see this gray area down here. There's definitely liquidity down there. Okay, guys, around the 391.3-ish to 392 zone. All right. So yeah, but like I said, wait for some support levels to fail that were cleared or recaptured. Okay, starting with 200 daily moving average, 397, 395.7-ish, 393.5-ish. And then this liquidity zone around 391.3 to 392. And of course, that critical support level at 390, which is also around with the 50 daily moving averages. If that level failed, look to short, guys. Simple. Not easy. I don't want people to think, oh, Uncle, you think it's easy? No, it's not easy. It's very draining emotionally and mentally. But I'm trying to simplify our process here, okay? And help us with how I trade. All right? We look to short when the support fails. All right? Okay, you guys got my levels. Below 390, I got 388, and that critical 386.6 level, which is the 38.2 fib level. And this triangle pattern is down to 385.88. So if that fails, that will be a false breakout of this pattern right here, okay? And of course, we still got this trend line that has 6 touches. If it does break down below all that, got that critical support at 382.5. That will be the breakdown of this trend line. Below 382.5 would put 380 below, and you see all these liquidity levels down here. There's a lot of stuff, a lot of stop losses and stuff set up down there, okay? So, it'll be very bearish if that level fails. So that's the bear case scenario. Bull case scenario is that SPY continues to melt up, okay? While we did clear the 200 daily moving average, we also cleared that 23.6 fib level on Thursday. So at the lowest, if SPY decides to pull back because it is in overbought territory, you want to see 395.7-ish to 395 zone hold. If you're a bull, that's the level you want to see hold. Of course, you want to see that 200 daily moving average hold as well, because we did clear that on Friday. All right, so as long as above 397, stay bullish. Watch that 398.48 level. That needs to clear. I mean, it did clear Friday, but only by 2 cents. I need to see a stronger close above, and that will put the yearly downtrend line in play. Is at 400.9-ish to 401 zone now, okay? If that clear, I do have a resistance level around at this, it's a area liquidity right here as well. You guys can see 405.5-ish, okay? But there is above 401, there is resistance at 402.8-ish, or can round it up to 403, okay? 403. And above 403, we'll put that area of liquidity in play, 405.5-ish. And then we have that 410 to 410.5 zone, which is December high. You guys can see there's more areas of liquidity. There's liquidity grabs up there with people setting their stop losses, all right? So yeah, you guys got my bull case. You guys got my bear case. All right, now it's up to you guys to trade it unbiasedly. What you guys do with this information, it's up to you, and I hope it leads you to green. Bah! Triple Q continues to be bullish, as Uncle has been saying. It's not prediction, guys. I don't want anyone giving me credit for prediction. Uncle, you called it. No, it's just price action translated. I'm just translating the price action, okay? So I do have first support at 280, as long as 280 holds, all right? This is the bull case. As long as 280 holds, I do have 283 and 284.8-ish, rounded up to 285 as the next resistant, with 287 above that, and a critical level around 291 to 292 zone. Okay, that's the bull case. It needs to stay above 280. The lowest it could drop or should drop is 277, which is where the 50 daily moving average is, okay? But in my opinion, the bear case scenario really starts if we drop back below the 50 daily moving average, putting 275, 273-ish, 269, and 267 back in play, okay? So if we drop back below 277, 50 daily moving average, I will switch my bias back to bearish, okay? As long as above 280 with 277 lowest, stay bullish. Like I said, 281, I will give it a resistance at 281.2, that's this pivot high right here. And then the 283 and 285 level, okay? With 287 above that. IWM, guys, I mentioned we had the breakout. On Thursday, I mentioned we had the breakout. And we got that breakout. And it continued. And it hit the 61.8 fib level. I got fib level from August high down to October low. So 61.8 fib levels at 196. All right. Excuse me, 186.9. 61.8 fib levels at 186.9. And on Friday the 13th, IWM closed at 187-ish. Okay, so I got the next critical resistance at 187.6. It's a lot of area liquidity around there, but the resistance I got is at 189.5-ish with 193 to 194 zone above that. Okay, but 186.8 is must hold as support, okay? Because it did break out. Next support is at 186. Let me see this pivot high. 185.95, but I'll say 186, okay? 186 fail. We can go back and test this triangle pattern as support, which is at 184. If 184 fails, guys, because bulls must hold that level. But if 184 fails, that's a false breakout setup. Put in 182.2-ish. 180.7 and 177.5 is back in play. Okay, maybe even lower to go break down this triangle pattern right here. But all I'm saying is 184 must hold. Okay, if bulls don't want bears to take back control. All right. Here is Apple. Okay, I got Apple. It continued to bounce from that 131.5-ish level. Finally cleared that 134.4 level. Okay, so we got the next target at 136.7 to 137.5-ish zone. And if that clears, that will put 139.3-ish to 140 zone, 142-ish, and 143.5-ish above that in play, okay? If you want to get bearish, need to break back below 134.4 to give us a false breakout setup. Put it back, it will put 131.5 back in play. Break that down because it's been holding steady as support, but we break that down, I'll be very bearish. Putting 130, 129, 128, and 126, and a whole lot of liquidity levels below here, but it got support around 123.7-ish, okay, with 122.5 below that, okay. Bear case scenario starts when 134.4 fails. Keep it simple, right? As long as above, let's try to stay bearish or bullish, okay. Let me put Tesla up in here. And yeah, you guys can see it's just not clearing that 123.5-ish level. Continue to chop between 115 to 123.5. Okay, 115 to 123.5 is what I have as the chop zone for Tesla. Okay, the way I trade chops, you can either scalp it, stay in scalp mode, or more safer ways, wait for the break of the range. So simple, 123.5 clear. Swing calls 115 fails, swing puts. Okay, anything in between is chop, and I'm gonna leave that up to you guys, how you guys want to trade that. I recommend staying in scalp mode. Okay, now if you find it helpful, between the chop, I got 120 and 117.5 as support levels. Okay, inverses here. So the VIX broke down a very critical level at 19.4-ish back on Thursday. You can see on Friday it back tested at that level as a resistance and pushed downwards. So VIX is showing some really bearish price action here. To be bullish, it needs to recapture 19.4 to put upper targets in place, down with 20.5, 22, and 22.7. Okay, as long as below 19.4, stay bearish on VIX, with 18 as the next support level and then 15.4-ish below. DXY continues to look bearish as well. Not as bearish as the VIX, but overall bearish. Okay, the next support that I have is at 101.9. If that clears, could drop even lower. Maybe go test a previous pivot low at 101.2 and a previous pivot high at 101. All right, I got resistance at 102.9-ish. Recapture a resistant level, and then I'll be a little more bullish on it. Start at 102.9. Okay, let's end this with the option flow. Filter for 500K premiums or above. You guys can see here 81% into puts. Now I've been showing you guys these option flow for about a year now. If you guys been subscribed to me for a while, I've been showing these option flow for about a year. Some feedback that I've gotten this past year was like, Uncle, the option flow is always bearish. It's always bearish, Uncle. Well, like I said, I've been showing this for over a year now, almost February of last year. The whole time since February of last year, the option flow has been bearish, and you guys can see how that turned out. Okay, you can see now in hindsight how that turned out. So let's use this. Let's use 22 as a learning experience for 2023, right? All I'm saying is, option flow is continuing to be bearish. All right, don't shoot the messenger. I'm just trying to share the knowledge and wealth here. Triple Q, very, very bearish, 93%. All right, you guys can interpret this however you want. Uncle is telling you that this is what the flows are showing, and last year we were seeing these type of flows, and you guys saw what happened. All right, big money is betting to the downside. Okay, IWM. Look at that. Even IWM, big money betting to the downside. 100% in the puts. Small cap stocks. This one January 20th though. 185 strike price. Okay, so it's not that out the money. Tesla, very, very bearish as far as option flows go. Okay. Apple. Ooh. Apple bearish as well. A lot of block orders. Seeing some sweep orders as well. Okay. And let's see what the VIX is up to. Okay, we got some calls for the VIX. Some people are loading up on calls while the VIX is this low. All right, guys. I hope you guys found value in that. And I hope you guys enjoyed my price action analysis. And I thank you guys so much for watching. If you guys want more content from Uncle Charters, please consider joining my Discord. I would love to serve you guys and make money with you guys in this market. All right. Thank you guys. Peace.